Well, hey, everyone. Thanks for tuning in to another Franchising Done Right podcast with me, your host, Ralph Kinder. I am tickled to death today to have a founder of one of the brands that I work with on my podcast with me. So, Dennis Schooley is here, founder and CEO of Schooley Mitchell. Schooley Mitchell is just, they're killing it. They're a B2B brand. They save their clients money, they don't cost their clients any money, and they are probably the ultimate in recession resistant business because of the very nature of what they do. So, Dennis, I'm excited to talk to you today. This is just a thrill for me. One of the things that, in my business, a lot of people think franchising is just restaurants, and which is
Yep.
clearly not the case.
Yep.
And you guys just have just a completely different business and approach to what you do. And I can't wait to hear the story. But interestingly, I was talking with one of the people on your team, Dennis, and many years ago, I worked for a restaurant, a small restaurant group. We had maybe 10 locations or so, and we used a company similar to yours to find us some savings within our programs. And they did thorough analysis. They went through all the P&Ls. This is the old days when all the P&Ls were had paper invoices and stuff.
Yep.
And at the end of the day, it cost us nothing. And then they wrote us a huge fat check. And that was really cool. So I just wanted to share that story with you because, not many people know that, and not many people know that your kind of business is around. But you guys
Right.
were founded in 97, franchising since 2004. So tell everybody kind of, what you do, Schooley Mitchell and you and your, the idea for starting up this whole thing and how we came to be where we are.
Sure. Well, first of all, Ralph, thanks for having me. Really pleased to be here. I don't know if you should be really tickled about having me yet because you haven't heard me talk yet. So we'll see. If you feel like that at the end of the thing, we'll go with that. So, but anyway, yeah, I'm an accountant actually. Hopefully, my personality doesn't belie that. But anyway, I'm a CPA, and I ran a normal accounting practice back in the 1990s. Well, I mean, we were always a little bit more of an aggressive firm, and we got into things like computer consulting and management consulting, even sports consulting. And as a result of that, our own expenses started going up. Well, one of our clients was actually a franchise company when we had converted from cash registers to computers back then. So that was quite a change. But because of all that, I learned about franchising because I became friends with the two brothers that ran that particular system. And it was in a more
Okay.
traditional, what people would expect franchises to be, locations. And I mean, as you said, a restaurant, burgers, chicken, muffler parts, that sort of thing is what people expect. But because our expenses went up, we started to take a look at it in a little bit more proper fashion. We had one of our programmers write us some fairly rudimentary script to help us understand. I mean, we knew kind of why they were going up because we were growing, but not really. But when we looked at it properly, we realized we were spending 30% more than we had to. And we thought, well, aren't we stupid? And then we went, well, wait a minute here. If we're stupid, probably our 700 accounting clients are stupid too. I mean, that's saying that a little facetiously, but the point is, yes, it was something that wasn't easy to get a handle on. And so that's really how it started. And we had to decide at the time, because we knew this was something that we could take on a much larger scale than our local market. Do we really want to hire and fire and motivate people across two countries? Or would we rather use this model that we'd learned all about as a franchise and, use that as our sort of expansion strategy? And, franchising is a distribution model. I mean, at its core, that's what it
Sure.
is. And, but usually you're, like I said, distributing coffee grounds or hamburger meat or muffler parts. But in our case, we're distributing information and data and knowledge and training. And you know what? It's a great model for our business, and it has been for 25 years. So we're really pleased that we are where we are.
Yeah,
I don't know if that answered your question.
no, it does. It's a really unique concept within franchising, and there's so many attractions to what you guys do, or attractive components to what you guys do. Um, but overall, ultimately, what you guys do is you analyze, right?
Yep.
A franchisee comes in, they get a book of clients. You guys analyze what their spend is, help them negotiate better terms, if I'm not mistaken,
Yep.
and then you share in the savings with that client over the next, what is it, 3 years, something like that?
Yeah, it's 3 years. And you're your description is correct. To give you a little bit more grounding, our service is actually pretty simple. I mean, we take a look at what any business or any profit or any government agency might be spending in 18 different cost categories. All those things below the gross margin line. Businesses take care of their sales and their direct margin, their expenses that go into their inputs. They're really good at that. That's why they're in business. But looking at all those things below that line, that's pretty difficult because a lot of them are very complex. So that's what we do. And we really do three things with those expenses. And like you said, the work that we do, we don't charge anything for that. We do the auditing and the digging and the negotiation and all those things that create great results without a fee. What we do is we create savings for the client through really three different things. We identify errors in their bills. We recover that money for them. We will identify redundant services, things they're paying for that they don't want, need, or even realize they had. And then thirdly, more important than the other two, we understand the whole market because we've been doing this for a long time. And so we understand what prices a client should have. Very few have those prices. So we're able to negotiate with the vendors because we've done 32,000 deals over time. Well, that means we know where the vendors can go. And maybe more important than that, the vendors know that we know where they can go. So our result is going to be different than what the client can get on their own. And so, like you said, we don't charge anything for the work, but we do share in the result. We share in the savings for a 36-month period. Actually, well beyond that usually, because our clients want us to keep doing it. So that's how it works.
Yeah. And why wouldn't they want you to keep doing it if you're able to put more cash in their bank, right? So
Look, I should clarify one thing. We never share for more than 36 months in any one chunk of savings, but we will find other chunks of savings for the clients. And those ones, they want us to continue doing that because, like you said, it's just more cash in their bank account instead of the vendors.
yeah, that's such a cool thing. So when you guys, have a franchisee that comes on board, Dennis, what does that look? What is the role of the franchisee, and really sort of who is the ideal candidate for you guys for franchising?
Yeah, and I mean the first thing, let's talk about the role because I want everyone to realize that it's not about going through bills and contracts and being on hold for 3 hours with Verizon. That's what our people do. We have 160 people in our head office, and more than half of them are analysts that specialize in each of these different 18 cost categories. So we're doing all that nitty-gritty work that really no one should want to do. That's
Yeah.
what our people do with the visors and the armbands on. Our franchisees are the ones out doing the fun stuff. They're building relationships, they're obtaining clients, they're presenting the reports when they're done, of course, with our support. They're building those relationships with their clients to get referrals and to get renewals, all those things that are really the active things in their communities that builds a great business for themselves. And that's what it is. We're just doing all the nitty-gritty work. We're building the hamburger sort of thing.
Yeah. So they're really, they're the business development executives, right? They're going out there, they're
right.
capturing the clients, like you had said, building relationships. I would assume chambers of commerce and BNI institutions, and just other
We're very good
businesses.
at that. We're very good at those two things you just mentioned because we've got very specific programs. And the reason we're really good at it is because any of the people that are in any networking group, but you mentioned chamber, you mentioned BNI, none of those members has a cost reduction consultant, and neither does anybody they know. So it becomes much easier to refer to our people than really it is to anybody else, because you can only refer to an accountant or a plumber when somebody needs an accountant or a plumber.
Yeah.
But nobody is a cost reduction consultant. So that's why the market is so big through those venues that you just mentioned. But building relationships with client, setting up shared revenue models, building relationships with professionals who have other clients that can refer, all those kinds of things are what the franchisees out there doing. It's the fun stuff, like I said.
Yeah. With the clients that you guys are able to secure, is there sort of a sweet spot in terms of numbers of employees or revenues, annual revenues, anything like that?
We can help everybody. Now, we're not going to make a whole lot of money on the hairdresser. We might not make anything, but we're going to confirm to them that they've got their 3 phone lines and their 2 cell phones and the right plans, that kind of thing. But really, we can probably help them anyway. Just understand that they've got what they need to get, and that relationship will end up in referrals to other businesses. But we've done everything from the hairdresser right on through to multinational, international corporations, and I can spit out some really big names. I'd rather not name drop right now, but really anything in between: government, charities, churches, nonprofits, business of any description, really it boils down to, are they incurring any of these 18 expenses? Well, other than a fisherman in a boat that doesn't have a cell phone, the answer is always going to be yes.
Yeah. Yeah, I was looking at your list of things that you guys do. I'm not gonna bore everybody by reading them all off, but yeah, you mentioned telecom, merchant services, waste, electronic logging devices, facility supplies, fuel, gases, uniforms and linens, office supplies. I mean, marketing and social media, software as a service.
Yep.
It is so broad with the different categories that you guys analyze. It's amazing. It's just I can't see how there can't be some opportunity with almost every one of the new clients that you bring on. There's just got to almost be always something to
Well,
be able to
there
save
really
money
is.
on.
It's very rare where we're not going to find savings and help the client in some way or another, because we do cover such a broad spectrum. And really what it is, it's most of those expenses below the gross margin line, where it's really hard for companies to keep track of those expenses and really understand how to negotiate them properly. And that's what we do. And I mean, we started with telecom, 25 years ago, but we just added expenses as we went along because our clients needed that help. And so now it's at 18. It'll probably be at 20 by the end of the year, because we have a research department, and that's their job. And we're really trying to look at all those things that are causing what I always call death by a thousand cuts.
Mhm.
None of them is really significant on their own, but you add them all up, they can be pretty darn significant to that bottom line.
Yeah, well, and it's an expertise that quite honestly companies don't have. They don't have someone who's, an expert, subject matter expert on, you know, three different categories, much less 18 or 15 or however many that you're able to analyze.
No, that's
Um,
exactly right. And I can give you, let me just give you one example for like merchant services, for example. How many people know that there are 700 different pricing buckets that transaction could fall into? And, no, and they change every April and every October, all seven, they just do. That's what the companies can do. So, most people don't understand that there's a different charge on whether you tap or insert or take that credit card over the phone or the internet. There's different charges for that, and there's a different charge whether it's air miles versus points versus gifts, whatever it might be. This is a huge matrix. Well, who knows all that? Nobody. We do. That's how we help our client, and that's just one cost category.
I had no idea. I mean, as a guy who ran restaurants for a long time and hospitality and various things and franchising and all that, certainly that there's, merchant service fees for anytime somebody uses a credit and debit
Sure.
card. Well, I didn't know that there were varying charges depending on the type, whether it's an insert or a swipe or a chip or whatever. I
The
had no
same
idea.
card, the same card can have multiple categories. And it's just, that's what I mean. Most people will take their invoice, divide by the sales, and they get what they call an effective rate, which has nothing to do with anything. It's just an average of all of that. But each transaction needs to be analyzed properly to determine, did it go in the right spot? And should we have a different rate structure because most transactions are this kind and it's not matching to what they're being charged? And that's just merchant services. Every cost category is similar to that, Ralph. So that's why it's so confusing.
God, I had no idea, Dennis. I had no idea, especially with merchant services, it was that way. Yeah,
Yeah.
that's why I love doing what I do because I get to talk to people like you that are smarter than me, and I learn stuff all the time. It's so cool.
I'm not sure I'm smart. And I don't even know this stuff. I've got people. I'm just giving you sort of the surface. So no, I'm not so smart.
Oh, well, I don't know. You built a huge community of successful franchise. How many franchisees do you have now? Over 300, right?
About 350, yes.
Good Lord. That's a big organization. I'm sure you know this statistic, but it takes the average franchise organization 10 years to get to 100 franchisees, and
Yep.
only 5% of franchise organizations ever get there. So the fact that you're at 350, my hat's off to you. You built a really phenomenal brand for sure.
Well, I will tell you, we did it very purposefully. We grew very slowly and methodically for years as we built out our system. We've really spent millions of dollars in developing our tools and our systems and things. And we've gotten to this point where now things are really taking off because people like you, Ralph, see the opportunity here where people can build a great business for themselves in a professional B2B environment. And yeah, it's a franchise, but it's not burgers, right?
Yeah.
It's what we do. And so yeah, we're pretty proud from something that really was dust, just an idea 25 years ago, has grown into what it is today. We're very proud of it. My wife and I actually run the business together. She's a lot smarter than me, so she runs the analysis teams and the production and the programmers and all that. I do the sales and marketing and the franchising, and I'm the pretty face, which that's why we're in big trouble. So
I think you, what's the word for it? Self-denigration. No need for that, my friend. No need for that. So, here's the cool thing, and it's for the audience. I'm saying it's a cool thing. So this is a franchise opportunity. You're Monday through Friday. Nobody's really going to do. You're not going to meet with anybody unless you're on the golf course on a Saturday or Sunday, right?
it's right. Yep.
It's a Monday through Friday business hours. But the investment is that's the craziest part, because I think your overall investment's 75,000 ish, something like that. Is that
Yeah,
right?
actually a little bit less than that, but yeah, our franchise fee 73,000, and there's really nothing else. You need some letterhead, envelopes and stuff, but it's a home business for the most part. I mean, people can have an office if they want, but very few do. They just operate from home. You need a computer and a cell phone and a printer scanner. Most people have all that. So really, it's not about even though our business is cost control, the franchise itself is not about controlling costs. It's about getting clients, building relationships. That's what it is.
Yeah. And so I think, if I'm not mistaken, tell me if I'm wrong, Dennis, but with the way that you structure your franchise agreements, if you got somebody in Dallas, Texas, which is basically where I reside, but they've got an old employer that they used to work for in Phoenix, Arizona, or wherever, or they've got relationships with somebody in Seattle or what have you. If you've got that relationship, then that can be your client. Is that right?
Well, yes, but even if you decide you want to go after somebody in Seattle or in Toronto or Boston, you can do that too. So, yeah, your point is we don't have territorial restrictions, which, it's a lot of most franchises, in fact, will give you a territory, and that's a good thing. I mean, it protects you for your little hunk of land.
Mm-hmm.
But, if it's a hunk of land, it better be the right one, right? It better be the right mix of buyers, the right mix of traffic patterns and future and competitors and all that. But none of that affects us because we don't have territory. So, if you've got a client that's got multiple locations, or you've got like you said, somebody from a former job or business, or you've got a relative in Boston, or you've got a summer home in wherever, all of that's open to us. So instead of protecting geography, we protect the clients that the franchisee actually has. And we have a prospect protection system too, which has certain limits to it, of course. But yeah, it's really a wide open US and Canada. Wherever they want to get or clients, they can do that.
That's really cool. I love the ability to do that, and then the flexibility, because, like you said, really all you need is a phone and a laptop, and and a printer if you must. But you could take that family vacation, and then if you need to, you're in Florida and you're on the beach and you need to take a call or two. You've got the flexibility to be able to do that, meaning that you're not chained to a specific location.
It's funny you say that, because I had a conversation with one of our franchisees not that long ago. And at the end of the conversation, she said, "By the way, I'm on a beach in Hawaii." And I had no idea. But our business is very portable and flexible in that manner.
Yeah, I mean, there's huge value to that, right? And especially, I would guess that probably, and this is only a guess, Dennis. I don't know. Tell me where I get this wrong, but I would guess a lot of your franchisees are corporate refugees, right? Someone who maybe they've been in corporate America for a while.
Yeah.
Maybe in a business development role, maybe some other kinds of roles, but and they're just probably kind of tired of the 70, 80 hour a week grind, stuck in traffic, the whole thing.
Making money for somebody else. Yes, all
Yeah.
of that. Yeah, no, that's I mean, we have sort of a list of must-haves. We want someone that has, like you just said, executive or management, sales or marketing or consulting experience, because we need to know they're comfortable talking to other business people. As long as they're comfortable doing that, we're going to teach them exactly what they need to say and how to deal with the conversations, the objections, all that sort of thing. But they need to be comfortable and willing to work at it. That's it. That's all we need.
Yeah, it's it's just such a cool business model, and again, sort of breaks down all the barriers of what people think of in terms of franchising. So with customer acquisition, I mean, sounds like there's a lot of networking, and chambers of commerce and stuff like that. Are there other programs that you guys have in place to help drive new business for franchisees, or anything that they
There
can
are
opt
our
into?
training is really very specific in terms of all the different things that we do to obtain clients. And there's a lot of different ways. And each franchisee, by the way, Ralph, is assigned a one-on-one coach, and that program lasts for 3 years. So anybody that doesn't do well, it's because they're not working at it. We're trying to do everything we can to help people succeed. But we've got our main focus is how do we build great relationships with our clients so that our clients will refer to us to their neighbors and their vendors and their customers and their networking associates. We have a concept we call the shining star, and that's what that relates to. But then we build relationships with other professional people like accountants and lawyers and bankers and financial planners, because they've also got a whole lot of clients themselves, and we make them look good by saving their clients money. So those become good referral sources for us too. And a lot of our people will set up shared revenue models where they will share part of what they earn with the person that does get them in that door. So, and then the networking, like you mentioned, with all the chambers and the BNIs and any other type of networking group, those are all the things that our franchisee is doing. And it can be any subset of those. So it's not one way, to skin the cat. There's all kinds of different ways. The critical thing is, are you just going to work at it in a regular work week? Because if you are, you're going to get clients.
Yeah.
These things all work.
How long, and I love this because, I mean, again, you're in the client acquisition business as a franchisee. How
Yep.
long does it typically take for the work to be done and to come back and be able to share that
As
with
you
the
can
client?
imagine, that's going to vary according to the size of the client, of course. But a normal small to medium client, it's usually about a 4 to 6 week turnaround to get the work done, because there is work to do. I mean, we've got to gather the records, we've got to summarize it, we've got to negotiate with vendors, and sometimes they'll get you quotes back in 2 days, others will take 3 weeks. It's just all these things that go into it. So it's usually 4 to 6 weeks to get that work done. Now, if it's a larger client with all kinds of transactions, it can take longer than that, because you've got to we go through it transaction by transaction. We're not going to take any shortcuts, because we don't want to miss something that's really important for that particular client, or miss an error that might be in the bill. So there's work. Thankfully the franchisee doesn't have to do that work. But the key there is for the franchisee to know that if you just keep acquiring clients and putting them into that funnel, they're going to come out the other end at the same pace. So
Yeah, that's great. I love that. It is so cool. So, you know, so you've got a team of analysts that do the actual work. You've
yep.
got the franchisee who does the client acquisition. So they probably don't have a lot in terms of employees or staff, I would guess, right?
That's entirely up to the franchisee. I'd say about 80% of our people don't have employees or subcontractors. And the reason is there's a leverage model built right into our system, because we're the ones doing all the work. So if
Mm-hmm.
a franchisee can just keep acquiring clients, if you get a client every week, and if you want to think about what I just said, I've got 35 or 40 hours to get one person to say, yeah, sure, look at my bills and see if you can find me something. But if you get one client a week, you keep doing that, you're going to be very wealthy. So that leverage model is built right in. But we do have about 20% of our people that do decide, hey, I'd like to grow even faster. So I'm going to hire a subcontractor. They're going to go through the same training and support and coaching, but that way I can grow even more. That's up to them.
Wow, that's really interesting. So one client a week. I know it sounds easier than it probably is, but
Yes.
I don't think that's a terrible stretch either. If
I
you're
don't
if you're
either,
working the
although you're
business.
you're right. Not everybody does it. The ones that do are very, very wealthy. But to me, if you just think about, I've got 35 or 40 hours to talk to business people and just get one of them to say, sure, take a look at my stuff. You're not going to charge me, right? Yes, that's correct. I don't know
Yeah.
what I'd be doing for 40 hours if I couldn't get somebody to say yes to that. But it isn't easy. And I do want to emphasize that, Ralph, what you said. It does take work, and there are no's to go along with the yeses. So that's part of the formula. It's a linear ratio.
For sure, yeah, it's effort and output and all that stuff. I'll just a personal aside. When I ran restaurants, this is decades ago, to be honest with you, but I spent a lot of time in chambers of commerce, really working on those relationships.
Yep.
And it was never some people think, and in my business, I coach, anybody who, I successfully place into a brand. I talked to them about the whole Chamber of Commerce thing because there is such incredible value to it. But it's not like you can just show up one time and then all of a sudden you get tons of business. It takes
Absolutely.
time. You're building relationships. You're really being, an embedded member of the community. And then as you gain trust and you gain these relationships, then you'll start to get referrals. And that's almost no matter what business you were in. But when in the restaurant business, right?
Yep.
A lot of people were like, well, hey, can you help sponsor this? Can you help sponsor that? Can you help sponsor this? And, the answer was always yes when it was within reason. But the real value was just those relationships that you build. And then, I improved sales by more than $1 million in multiple locations just through Chamber of Commerce relationships. And that was, I don't even know, 25 years ago. So,
Yeah. And
yeah,
I want you to take what you just said and let's take it a bit further. I mean, our proposition is really with those chamber, those BNI members, I'm actually going to make you look good because whoever you refer to me, I'm going to save them money, make them more profitable. They're going to be thankful to you for making that referral. So it's really quite a bit easier for people to refer to us than it would be to anybody else that's in that chamber. And we've got really great programs to add value to those individual chamber members so they like us and they want to refer to us. It's just a franchisee has to follow our programs.
yeah, yeah. Now I love it. And it feels like this, Dennis, and tell me, if I'm wrong, but it feels like, I mentioned, recession resistant, in the beginning of the podcast, but it feels like you would thrive during downtimes.
We
When I
do.
can remember, again, I can remember my old days of running restaurants, the first sign of a hiccup in the economy, what does everybody do? Every pundit goes on television and says, quit buying coffee and quit going out to eat.
Yep.
Um,
And
but
it's
yeah,
the opposite with us, right? Because, you're right. Most business, and I can't tell you how many businesses tell me they're recession proof. They're really not, unless they're selling essential goods or services, they're not really recession proof. Doesn't mean it's a bad business, but when disposable dollars disappear, there's no money to buy what you sell, like a sandwich or a cup of coffee, So
yeah,
those are the things discretionary that get cut back. With us, we actually do better in bad economic times because what do companies have to do? Well, they can't increase their revenue because of what I just said. So what do they have to do? They got to cut costs. Well, that's what we do, and we don't charge money to do it. So, through that 2008 and 9 recession period, our franchisees did better than ever. Whether it's recession or inflation or pandemic or tariffs, our franchisees are going to do better because the economy's topsy-turvy. That's where we help our clients.
yeah. Anytime there's uncertainty in the markets, whatever the markets are, like you mentioned, tariffs or stock market or interest rates up or down or what have you, people get nervous around that, and so
Yeah.
I, it's just such a valuable service of what you guys do. Um, yeah, I
Well, I
just
actually did a webinar last week about the subject of tariffs because there are things that a business can do to mitigate the effect of tariffs on. It's nothing to do with politics. It was just to do with, okay, this is what's happening. What can I do about it? And we had hundreds of participants on that webinar. So that was so that our franchisees could provide that information to their prospects and their clients and their contacts. And so we do that for our franchisees at home.
yeah, it's so cool. Well, I know that as a consultant, you guys do, provide a lot of support to me and to my colleagues. So the
We do.
fact that you do that for your franchisees is no surprise to this old gray haired guy. So, well, Dennis, I don't even know where to begin, but low cost investment, 73,000 Monday through Friday, banker's hours, can work from anywhere. Um, you literally save clients money without charging them anything. 350 plus franchisees, across North America.
Yep.
What a phenomenal organization. You guys are just killing it. And, you know, you keep being you. You keep doing what you're doing. I'll tell you that for sure. So,
Well, thank you. I mean, it is a good spot to be. Our employees like to be here. We've got a really good culture. Our franchisees like to be here. I mean, we have an annual conference. It's just a great event. So thank you for that, Ralph. We're proud of what we've built. We really are. So,
you should be. You should be. I see a lot of brands, and you're at the top of the food chain, if you will. So,
well, we
anything
got bigger
else?
goals to come.
I love it. I love it. Anything else for the audience that you want to part with?
I don't think so. I mean, I really just answer your questions and try to give you as good a story as I can about what we did and how we did it and where we are. So I think we've covered that. So I don't have anything specific. No.
Awesome. Well, there you go. Dennis Schooley of Schooley Mitchell, the man, the myth, the legend, is right here with us today. So, thanks for tuning into the podcast today. For those watching, press the like button, subscribe to my YouTube channel. I'll also drop some contact information for Schooley Mitchell down in the comments below. And what a great brand. Thanks, Dennis, for coming on. I'm Ralph Kinder, and this is Franchising Done Right.